Okay, so we have a go with Ripple also. It's going to be 1.2. Remember, we're not going to hire, I don't think we're going to hire that one. 1.2, but we have a go because on this is a 1 hour chart. We're having an internal 2 here, definitely. An internal 2 signal, definitely is going to be even stronger on the 15 minutes. Let's take a look at it. We're having recurrence in that internal 2. Earlier, remember, we were expecting still to see a C. There's A here, there's B. What we would have expected C to terminate somewhere earlier, B, sorry, to terminate and move down into wave C. But of course, the market has other plans and it's moving higher, breaking out higher. Okay, so there isn't really going to be any more C's. All right, you're looking at the market bottoming now in this correction, for this correction at least. So that C is not, that C shown here, 3C was going to go all the way down to 95, but it's no longer the case. We're breaking out of that leading diagonal. There is now definitely internal wave 2s here. So we'll just take this straight to the 1 hour. Okay, so this wave 3 moves here. We had an asymmetric triangle or bear flag, and it's breaking up, not down, unlike usually this kind of flag would. Of course, we had a bear trend, so it still have it break down. But anyway, the important thing now is to get into it and buy into it, and there's very little leeway to make that buy, because what you're seeing here is, again, this is a wave 1, so let's just have that labeled very quickly. You're interested in these negative momentums or end of the move on the wave 2. It's 2 here, okay, and then this is an internal 1, internal 2. You have this signal again. This will always go by, go with or go by, and that it is the breakout of a wave 3. We also have a neckline, so the market becomes a go at this point and at the least possible risk. So it's probably the best entry that we can hope to make. if it proves correct, of course, on the longer term. You're having we have a neckline here. It's a local neckline, but you do have a neckline here. Okay, so you just want to buy the market. Again, the stop is right below level 2 at 1.06. Current market is 1.10. If this falls all the way down to level 2, then of course the analysis is wrong. There is another thing we should want to consider, is this level 1 could be something triangular, so the stop would rather be here at 1.02. You could still correct the whole of wave 1, so it's like we don't want to be too stubborn or too 1.02, 1.01, by current market 1.10. all right, that is the best we're gonna get. We're looking for 120. We believe this is what we are gonna be getting, or this is 78.6%. there is 120. We are almost certain this is the first move before we have rejection. So 261.8 comes in at 122.7. that would be our target. $122.95 has a neckline here. Of course, you can all see that we're having some kind of a neckline here, so you're looking for this projection. So why 120? What are we exactly seeing? We did this yesterday, but it is important to revise it, I believe. Alright, so we are of course moving in an ending diagonal, just like with Bitcoin, and this correction of course all ending diagonals move in actually a combination of 3 swings. So you had a 1 and a 2 and a 3. Okay, so it could be this is the 1 and there's an A and a B and a C. This is a 2 and there's going to be a 3 higher. But let's just stick with this count that there's a 2, there's a 3, 4, 5. Now we're going to have a corrective move. So there's been an A, there's going to be a B, and there's going to be a C. Each one of these moves are 3 swings. We've just seen the 3 swings of wave A. You've just seen this here. This wave A, you have already seen the 3 swings that we're going to be doing there, A and a B and a C. This is just a higher degree wave A in red that we're seeing on the analysis. Okay, so what we've just shown is just this A here in red. We're going to be doing that B here. Okay, so forget about this C now. This B in red here is actually a 1, 2, and a 3. We think it's a 1 and a 2 and a 3. So this B in red here, alright, is actually shown as an A in red. It's going to be a 1 and a 2 and a 3. It looks, of course, for first target is 1.2. You're looking again, so we just mixed up the labels. We are really sorry for this, but this B here in red that you're seeing is actually 3 swings in itself, and the 3 swings will retest the lower boundary of that ending diagonal. So you're looking back to retest these levels here, 1.04 and even 95 and 99 and very low levels. So here, instead of that, we had an A and a B, alright, and a C. Okay, so that C now comes here. This is a red A finished. Now we're getting that red B. That red B is really going to be an A and a B and a C. All of that just that red B correction. We're gonna have a correction back to 95, I believe, 97. So we don't really bother about the correction now. We just bother about taking profits at 1.2. You have it here. So we're buying. Okay, so it's more clear here. There's an A. This is the B that you're talking about before you move into C. This is your red A that we will be doing in a very short while. It takes you to 1.2. This is wave 1. Alright, that is a 4-hour chart. That before it, I believe, was just a 1-hour chart. So it's so we got the charts mixed up. I'm sorry. Now that is A here. Okay, once we break out of that white ABC we've done, we're doing that red A. We're going to 1.2. You're looking at this B now. Before you go up into that ending diagonal into a C, this B is wave 2, and this is gonna be an A and a B and a C, and then bingo, you go up. So first target is 1.2 right now. Whatever we're buying, 1.10. We just take, maybe 1.14. We'll check it again. We take profit at 1.2. The stop is 1.02. There's gonna be another correction back to 95, and then we take profit again to 1.2. Another third correction to $1. This is the last time. That would be the C into that wave B. At that point, the fundamentals would have changed. We can expect to go all the way to 1.4, 140 cents. Before then, it is really too early to consider that you're going to have this kind of breakout. Okay, so we would be buying around 110. You're really buying around the current market if you are really interested, if you think it is suitable, right? It's just 110. Okay, and we have a stop, real stop at 1.02 or 1.01, 1.02. Our virtual stop or our mental stop is right here, 1.06. What happens if the market really falls below? We expect we're having a signal here, right? 1-hour chart, we do have a signal. So that's 1-2. Market really should be moving higher, shouldn't fall below level 2 again. Okay, so if the market does test level 2 again, then we know we're seeing some kind of heads. We want to get out of that position or retraction because we're still inside of that triangle. From the current count and the count momentum plot on, remember we're supported on 2 momentum histogram plots, on the 1-hour and the 15. They're both showing the same plot and therefore both running the same cycles, and the feed is therefore positive to move higher. That's why we do that buy.